Hello everyone, welcome back to new weekly market update. Markets finished mixed last week but steady. US stocks rebounded late on tech strength while European shares rose on rate cut hopes, with investors focused on inflation data and central bank outlooks.
Well, we got a little bit of mixed reports in the past week. We anticipated some volatile movements to one side actually, and that happened when we analyzed markets during our webinar at Tuesday. If you were there, lucky enough to see us, you should have made some money with us. If not, then why aren't you really as updated? Anyways, that was about it in the last week. Nothing really volatile happened. So we're going to be expecting some steady movements soon. Let's go and analyze that on charts. All right, everyone, so here we are kicking it off with gold. As we had anticipated in the past week, we anticipated a retracement to this support, and this is exactly what happened, then gave us a confirmation for a bullish entry. We did actually do live trading gold at Tuesday. For those who have attended it, you should have entered also long, as have analyzed it, gold should go up, and it did go up exactly as anticipated, hit target 1 and 2. Perfect, even though you could have scalped, there were so many opportunities. If you haven't seen that webinar, then you should really be updated on what we do and what we're doing so you can make the best out of us. Yes, I'm telling you, take advantage of us, man. You want to make profit, right? Watch experts do what they do and use it for yourself. So as we anticipated, moved up and again reached all-time highs. Now, if we're going to anticipate or analyze what's going to happen in the upcoming week, so here's what. There is an uptrend for this gold movement, okay? Currently, price is at the middle of it. So there is also an ascending channel. So as I've told you before, ascending channels are money printing machine on gold. So you could have also entered as a breakout trade here. Of course, you should be targeting resistance, not a break of all-time highs. It's not a trade you should hold because the entry isn't optimal for such implementation for a trade. So here's what's up. I'm going to change the color so you guys be having some attention here. We had a breakout, okay? But this breakout was not enough to push gold all the way up to the trend line and break all-time highs. So what does that mean? We don't have enough liquidity. So even though we do have an ascending triangle here, it is in the middle of a trend and it's not in support, it's in the middle of the trend. So despite that we have a strong bullish momentum by the end of the week, but still that bullish momentum is within the range of the ascending triangle. So what we should anticipate, a liquidation. Why? So market liquidates, goes back to the support, trend line, could be within this range. And here is where you want to look for a bullish entry and a possible breakout above all-time highs. Yeah, so that is about gold. There should be a very possible liquidation because there is not enough fuel to push gold above all-time highs. And that's how market moves. Understand how money moves. And you will totally agree with that. So what should you do right now with gold? Don't do anything. Even if it carries on moving upwards, it'll be a volatile movement. And if you trade volatile movements, eventually you're going to blow up your account one way or another. And this is something neither of us want to see, not you, not us. So that's why I'm advising you to go for a more safe entry and optionally, yeah, I'm saying optionally, it's an option to you, to take a long position where I'm telling you if gold retraces that support. It's not a financial advice, but you guys know what about financial advisors? I'm gonna tell you what about that once we go to Euro USD, and we're gonna go into it right now. So let's go into Euro USD. Look at Euro USD, how beautifully it had moved. So in the past week, I told you guys we are having a bull flag and a strong movement to the upside. And I also told you there is a very, very good possibility that Euro USD will continue going up in a volatile movement and you could actually make some very good trade with it, reaching up all the way up to the trend line. And this is exactly what happened. So I told you could enter a trade, put a stop loss here. Markets were there, I think. Yeah, because of the bull flag. And this is exactly what happened. So if you entered a trade, retraced, been a drawdown for a couple of hours, and then boom, skyrocketed in profit. So you see, I give you some risky trades that actually can make you a lot of profit. If you have listened in the past week, you would have actually made such good trade the way we did. Well, that's not way, let's say I did, because not everybody follows what I tell them to do. And I do disagree with that when I say something people really should listen, because I don't speak out of the blue, with modesty. Okay, so this is exactly what happened. From there, market retraced exactly to the trend line. Now, from here, we are at a mid support. It's not the strongest support. So we might see, because we have, take a look at here, there is a descending channel, a descending triangle, okay? There's a descending triangle. This descending triangle reflects somewhat of a bearish sentiment upon Euro USD. So even though we had the reports coming in the past week, the majority of them were negative to the dollar, which should actually make Euro USD go up. We've seen after the skyrocketing Euro USD retrace, which is technical stuff, right? Not fundamental related. For those who don't believe in technicals, every week I'm giving you reasons to believe in it. You don't believe in it, then you don't understand technicals well. You don't understand them, you should understand if you want to be in the business, and that's why you should come and learn from me. All right? So here's what we have. So there is a possible, right? A very good possible. So Euro USD actually took inner liquidity once and twice, okay? And formed this descending triangle. And then we have a strong pull down or strong push to the support by the end of the week. So there are actually multiple bearish confirmations that there is a very good possible break to the downside. So if this data happens, you want to target also this support as a target when a breakout. If we get a confirmation here for a bullish entry, you can actually buy Euro USD again. However, this actually is in parallel with gold. We're expecting a movement to the downside. So if we get some strong sentiment by the coming week upon the dollar, this should push both gold and Euro USD to the downside, which makes perfect sense as they've been somewhat parallel throughout the history. I'm speaking of Euro and gold. So, do you want to go for a long entry? If we get an opening candle, let's say on a mid time frame, that actually closes above this resistance, you feel me? If it closes above this resistance, so you could actually go for a long trade on Euro USD. So even though we have a strong uptrend and been there for quite some time, for us to go bullish on Euro USD, this time specifically because multiple confirmations, I'm telling you, don't just enter a buy randomly. There is a very good possible break below this level, okay? So if you want to go long, I would recommend you to wait for a closure above this resistance, preferably an engulfing or a Marubozu, or take another confirmation from, what's it called? The indicators, momentum indicators, such as RSI, preferably not the oscillator because it's a mid-term time frame. Or you can actually use Fibonacci tools to also anticipate things. Fibonacci, guys, is very good for anticipations, for those who don't know. And yeah, we don't really show you that. I do myself use it, aside from the weekly updates. So that's about Euro USD. Be cautious about your decisions by next week. And let's go into Bitcoin. Looking at Bitcoin, as we had highlighted, or about as we had anticipated in the past week, Bitcoin consolidated. So we were expecting not necessarily expecting, but let's say a consolidation among a narrow range. The range has been expanded, but to be fair, the actual range is between this resistance and this support. So market is still consolidating within these two. So if you can see, there is a strong bearish trend on Bitcoin. However, market is failing to make a lower low, all right? From after that low, it failed once, making an inverse fair value gap that the market hasn't really broken below, okay? And still consolidating. So even though we had market, notice this, on a smaller time frame, taking liquidity from above this inner resistance, right? It made some push to the downside that was completely bought up. And then again, another fall, and people bought the dip, and there are dojis in here. So people who are selling, they're looking at this fundamental outlook by some people who are saying Bitcoin might crash, going to 60,000, 70,000, whatever it is, multiple opinions. But technically what you're seeing is there's strength on the bullish side. So if I'm actually Keeping in mind, yes, we did have an ascending triangle here on Bitcoin that was liquidated, but still, it's still within that range. So you really want to be trading Bitcoin. Don't take trades on a short time frame because volatility will most likely liquidate your trade. All right, you want to trade Bitcoin, make sure you're doing it for mid to long term, especially for nowadays, because we don't have enough confirmations for you to do it on a daily basis. I would still recommend to wait for a strong bullish confirmation before a long entry. Now, about it being bearish, there is slight percentage, could be about 17 to 20% that Bitcoin can go actually bearish, but still I'm not on that side. So keep an eye on Bitcoin. We could see it, all right, wherever this came from. So we could see it trying to break above this resistance once more. But if you want to go for a long entry, make sure you have good confirmation within the week itself to form. That's about Bitcoin. Let's go into Nifty 50. Nifty 50 as presented as is. Not much happened in the past week. We still anticipate the same outlook we had anticipated for about 2 weeks. Markets in Nifty 50 have been very slow, but that doesn't necessarily change the aspect of what we are anticipating. So same analysis, that's about Nifty 50. Let's go into NASDAQ. Looking at NASDAQ, this one, we didn't actually make it as good. So we expected markets to move up in the past week, which did a little bit of movement to the upside, right? Which should have been your first TP if you're doing risk management well, and eventually would be going on break even, but most people don't really care enough about risk management. When I say most people, is most retail traders, right? And risk management, guys, is the key for you to make whatever profit, wealth you want to generate from markets. So it did continue to the downside, and this actually was a very solid confirmation why you should enter a bearish trend. So you lost that even if you didn't actually make enough, let's say, profit from your entry to cover up for the loss you've made in total. You should have entered again here. And this is what trading is, guys, is understanding how you should behave with market movements, whether it goes to your direction or opposing your direction. Yeah, you should be flexible, understand how analysis work, and be flexible. Because at the end of the day, you don't care if the asset goes up and down in value. What you care about is what are you making out of it. Yeah, and this is the mentality of a trader. So we did have a bearish trend. So when we get this confirmation, your target should have been to buy the trend line, or at least when you saw these candles forming dojis, you should exit the trade even if it was close to your TP. So yeah, it was a little bit of a tricky one in midweek, but earlier we got confirmations for a bearish entry. If you went 1 to 2, would have been an easy trade for you to go for. Anyways, what we're having now is a falling wedge pattern. Yeah, and markets did should highlight that better. I'm not the best guy to draw things, okay? So like that, yeah. So as you can see, that bearish trend, well, it does look somewhat of a falling wedge, but whatever it is, bearish trend has been broken above, market did retracement and it moved up. And now we have an ascending triangle, okay? With a Mariposa form. So what you want to do is you want to actually look for a bullish entry again. And actually there was a we got 2 entries for a bullish entry in the past week, which the first one was the break. Can I make a back to this? No. Okay, anyways, the first one was the break above the trend line, bear and retest, okay, which was here, the trend I just highlighted to you. And the second one was the cup and handle. Okay, a cup and handle. So that was also a good entry here. As we can see, market broke above it. So what we can anticipate is we can see this ascending triangle causing it either to go up or down. But either ways, if it goes up, market won't have enough fuel to continue going up. If it goes down to the support, okay, fill in the FVG, okay, something like that, then we can actually be more confident about a long entry. Stop loss there, targets there, and that will be an easy 1 to 2, 1 to 3, some about that. Trade, not a financial advice, right? Just analysis. You want to do it on your own risk. Of course, risk management is king, is how you make money. You don't know how to do it, just come and we will be teaching you. That'll be it about this week. Sami Ruslan was you guys, and I'm gonna hand it over to Mr. Amelian from London. Hope you're doing good, mate.
Thank you, Samir, for sharing your insightful information regarding the technical analysis. Here is Amir Amedian, Master of Finance student in UK and also fundamental analyst at Zylostar. As we are getting closer to the Christmas, the Santa rally has started. Let's have a look to the financial markets, what happened last week and what we're going to expect for the upcoming week. Last week was absolutely a chaos as we got plenty of economic indicators plus central banks meetings. This time, I want to start our session with the Western countries. In Canada, consumer prices edged higher in November, holding steady from the previous month as slower growth in services was balanced by rising goods cost. Overall, monthly price increases were modest. US flash PMI for December shows a slower business growth with new orders rising modestly and service demand softening. Meanwhile, price pressure surged to the highest level since November of 2022, largely driven by tariffs in the United States. From the other side, in the Great Britain, UK flash PMI for December shows a faster output growth driven by the strongest rise in new businesses for 14 months. However, employment fell for the 15 months and inflation pressures intensified, pushing prices to the higher levels. US payrolls, or better say NFP, rose by 64,000 in November, slightly above the forecast of the financial market participants, while the unemployment rate stayed at 4.6%. Job gains came from the healthcare and construction as the federal government jobs declined. August and September payrolls were revised down by 33,000 combined with October released for the first time due to the shutdown. At the same day and even the same time, last week we got the retail sales number for the US as it sent a mixed signals with headline sales declined and failing to give a clear picture of consumer strength. However, the core retail sales number rose after excluding volatile items, suggesting underlying demand remained resilient. In the UK, the Bank of England cut the interest rate by 0.25 basis point to 3.75% to support the UK economy as inflation continues to cool down. The decision was very close, 5-4 vote, showing policymakers are still cautious about easing too fast. The Bank of England said cuts will depend on inflation and job data, not a fixed path going to 2026. Meanwhile, last week we got also the UK CPI as well. UK inflation continued to cool in November with both CPI and HCPI easing and prices falling slightly on the month. Core inflation also softened, helped by cheaper goods and a small slowdown in services, showing underlying price pressures are gradually easing. Let's get back to the Eastern countries. The Bank of Japan kept tightening policy, lifting rates further as inflation stayed firm and wage growth improved. Bank of Japan chairman signaled normalization will continue gradually, avoiding any aggressive or rushed hikes. Markets saw the Bank of Japan as still cautious but clearly moving away from ultra easy policies, supporting a long-term yen stabilization. Let's have a look for the upcoming week. For the next week, as we are getting closer to the Christmas, by the way, Merry Christmas. So we are gonna get different economic indicators from different regions, such as GDP for the Canadian dollar, GDP as well, also for the United States on 23rd of December on Tuesday. And later we are gonna get the unemployment claims for the United States on 24, plus Bank of Japan Chairman Oda speech. Stay tuned with Zylostar. See you next week.
Thank you for watching us. Stay tuned for next week.
Feel free to put a like, a comment if you'd like to know more about anything in the market, what's going on. We'll answer to you in the next video, and have a good week ahead.